You almost have 20,000 cryptocurrencies. There should only be like 20. And so you have to see this .com type flush out where a lot of these go away. And then ultimately from the dust will rise the best of breed, very Darwinian in that, and they will succeed and they will flourish, and Bitcoin will see 500,000 and we'll see $1 million.
Gareth Soloway, the chief market strategist at InTheMoneyStocks.com, is widely known for his quite controversial views on Bitcoin. The veteran swing trader believes that in the midterm, Bitcoin will fall to $20,000 or less. Soloway adds that the Federal Reserve has been artificially pumping the stock markets through its incessant and excessive money printing. However, since the U.S. government cannot keep printing money to support the economy, there is bound to be an end to the reckless monetary policies and an adverse effect on the economy. According to Soloway, we are slowly entering a period where we see the full extent of the damage to the U.S. economy. From stocks to bonds and the crypto market, Soloway predicts that we are going to have the nastiest storms the markets have witnessed in a long time. We will begin with Soloway's prediction for Bitcoin and the rest of the market, then examine his general outlook for the economy. Please watch, share, and like the video. We love to hear from our viewers and subscribers, so ensure you hit the like button and subscribe to the channel. Thanks and enjoy the video.
Long term, I love Bitcoin. I love cryptocurrency. But medium term, see that this channel right here? I mean, this is a bear flag channel, and you're now hammering on the lower end of it. You just kind of hit it. You just bouncing a little bit.
Can you describe why that's a bear flag channel? Because I'm looking at this channel and it seems to be tilting upwards, right? Is it not signaling a move towards higher highs there?
Yeah, and this is what's fascinating is that's the way average investors, like retail investors, look at it. They say, oh, but it's making higher lows and higher highs. Isn't that bullish? In fact, if you look at 100 of these or 1,000 of these patterns, this is what's referred to as a bear flag. And what's interesting is you can see the opposite thing right over here, where you actually remember back last year, you actually were making the opposite pattern, and look at the direction it went. So when you're angling down, it's making investors feel more insecure, making investors feel more bearish, and therefore price is going to go the opposite of retail investors and going to go up usually. When you go this way, this is luring investors in. They're trying to con you in, not con literally, but it's trying to fake you out in terms of the price action. And this one breaks down. So again, people are saying, well, isn't this the same as this? And the answer is no, it's not. This was a down sloping channel. It breaks up. Upsloping channels tend to break down.
Okay. I mean, surely you can find exceptions to this, but yeah, sure. That's all right. That's interesting.
And you're right about that, David. Just to be clear, everything is probabilities, right? So if you looked at 100 of this pattern, 80 of them would break down, 20 of them would fail and break up, right? So it's probabilities.
So what's your range now?
So just to be clear, I mean, when you're talking about trading the range, so short, long, I mean, that's where you get into these really tight levels. But if we're talking medium term, let's talk 6, 12 months out when I think Bitcoin has a good shot of bottoming out. I mean, we're talking about some major downside. I'm still in the camp that you're likely headed to 20,000 or below as an ultimate target. Again, 20,000 would be the 2017 high. I think you're seeing more and more the realization that the stock market is weakening and money's being pulled out. It's a de-risking going on, which is very, very bad for Bitcoin since Bitcoin trades off of the NASDAQ essentially with de-risking. And you have to see this washout. I've said this from day one, going back to, our in-person interview in Dubai last October, that you have to see this full washout. You almost have 20,000 cryptocurrencies. There should only be like 20. And so you have to see this .com type flush out where a lot of these go away. And then ultimately from the dust will rise the best of breed, very Darwinian in that, and they will succeed and they will flourish, and Bitcoin will see 500,000 and we'll see $1 million. So ultimately midterms, next 6 to 12 months, 20,000 at minimum, maybe lower. But again, that is my midterm 12 month target.
In the long term, Soloway believes that Bitcoin will go as high as $1 million or more. However, his predictions for the midterm are not as good. The technical analyst sees Bitcoin hitting $20,000 or going even lower. He also gives his outlook on the U.S. stock market, inflation, and the possibility of a recession. He explains that the Fed could decide to continue raising interest rates until there are signs of a recession, or it could raise only a few more times, then halt if there are signs that the economy is turning around. Whichever scenario plays out, the technical analyst does not believe things are looking too good for long-term investors in the United States.
So the bottom line is everything changed. And when I say changed, it all comes down to the Federal Reserve. So the Federal Reserve went from a body that was printing. The government was printing. And all of a sudden, we're not getting any new stimulus, no new kind of build back better plans in the government. That's not going to pass. And the Federal Reserve reducing their balance sheet, raising interest rates, stopping QE. And it's basically putting a hard ceiling on the market. The market has no place to go but down to kind of unwind what we've been seeing. So this is kind of why in December when I talked about how gold would be the best performer in 2022. And so far it has been as we approach getting closer to the midpoint in the year. But bottom line is, this market will have major bounces. The great thing about a market that's not backstopped by the Fed is that there's volatility. So for swing traders and day traders, this is the best market in the world. For investors who are long-term, it's going to be a tough market. There's a lot more downside to go. And I want to reiterate that. That's what's so scary about this scenario is that, yes, that would give a slight positive to the markets in the near term. But after a bounce, investors would start to say, okay, but now a recession, maybe the Fed is a little bit looser and more slightly less hawkish, but now you're going to see a recession cause a slowdown in earnings growth that could get worse and worse. And then that's going to be a pressure on the stock market and these valuations in these stocks. So this is really potentially going to be one of the nastiest storms we have seen in the market, where again, I think that again, you're looking at the NASDAQ potentially being down 40 to 50% over the next 12 months from the highs of last year. Wait,
from the highs of last year, we're already down about, I can't remember the exact percentage, but we're not 40% down, but we're somewhere halfway. So you're saying an additional 20% from here?
Yeah. That's what I think. Yeah. So I think right now we're down about 22, 23%. Right. So I think you go down about 40 to 50% at least within the next 12 months. So it is not going to be a pretty thing. And you're already seeing the cracks, right? I mean, we've seen Facebook collapse. We've seen Netflix collapse. Apple's still holding on, but notice how Apple's earnings were amazing and the stock is still selling off. Notice how Tesla's earnings were amazing and Tesla still ended up selling off after that initial pop on earnings. Those are the signs that tell you big money is exiting from these big names, and it's just the start. And because those names make up such massive percentages of the indexes, that alone can take down the markets. I mean, you could have some of these beaten down plays that are down 90%, hold steady even, probably go down a little, but just those big cap names can take the NASDAQ 100 down another 20%.
Let's take a quick look at the crypto market before ending the video. Bitcoin, the world's largest cryptocurrency by market cap, continues its steady decline. The coin has shed around 19% within the past 30 days. As of press time, Bitcoin is exchanging hands at $37,600, its lowest price since February. Ethereum, the native token of the Ethereum blockchain, has also lost over 20% within the past month and is currently exchanging hands at $2,766. Ripple and Binance have lost 28.62% and 15%, respectively, within the past 30 days. Solana has tanked even harder, losing around 40% of its value within the past month. Cardano has also shed 35.43%. With the threat of recession still hanging over our heads, things might not improve further anytime soon. What do you think about Soloway's interview? Please drop your comments and observations in the comment section below, and don't forget to hit the like button. Thanks for watching.